Getting ready for today's session. What's good, Jay Cora? How can anything be good right now? Are people really panicking? Well, first of all, I think that's a little sensational. I don't think that people are panicking yet. I don't think that at all. But I do think that a lot of people and are focused on this chart. You guys familiar with? I remember this guy from back during the lockdowns, Andre stay for the for the magic. I don't know. And Andre Jank, and he's pointing out he gets an incredible amount of views per video. How many views are in this video? This was just 21 hours ago and over a half million views, 2.89 million subscribers. He's the Mr. Beast of finance. And Andre is an amazing presenter. And in this case, he's presenting to his audience, hey, listen, every time in the past that Bitcoin has closed below, by the way, big shout out yesterday on the stream. Someone's like, Jordan, I know you don't look at moving averages, but that's the SMA, not the EMA. Much obliged. Thank you so much. And guys, hold on one second. What's going on here? US government set to open up and gold and silver are like, boom, hold my beer. A lot of people are wondering, is this the debasement trade? And if so, what's going on with Bitcoin? Look, first of all, there's no way, if you asked me, would I have said a week ago that silver would be back trading above $53.50. Nice that you get to go back and start, counting your stack and things like that. But I never would have imagined. Same thing here. If we break out of our, and if is that a good look? We might have to get exact, y'all. So this was a guideline to show roughly how far away in time we were waiting for consolidation and then looking to see if gold was going to resume up. However, I might need to, and I am right now, just getting a little bit more exact on when a resumption is occurring, and you just got to stay on the right side. And I don't think this is the debasement trade that you're seeing right here. Yeah, a lot of people are saying, oh, well, Fed is about to do a couple of things. They're about to stop QT. They are about to continue cutting rates. 35% chance they don't in December. But we're looking at a new Fed board coming in 2026. It looks like it's going to be a lot more dovish. They're going to have the cover on inflation. And you all remember, I've been telling you pretty often that in 2026, there's going to be some cover because of shelter in the CPI. So you can see over here, you have 35% chance as of today. Fed's cutting into December. What is going to matter, and this is assuming the U.S. government decides to open up, is going to be the first week of December and all of the jobs data we get. But we did get some inflation data today out of the BLS, and we are seeing that rents are significantly down. I've been saying that in 2026, shelter is going to give a lot of cover for what's really happening with inflation because it makes up so much of the CPI calculation. 33% comes from shelter, and rents are coming off. And you can see, by the way, this is a cool chart. This is showing that this is how much of downside buffer core CPI has. Real-time rents are flat to negative, while BSL reports OER. Excuse my ignorance. I don't know what OER is. At plus 5.6. What is OER? Someone please let me know. That will provide an inflation cushion for the next 18 months. This is what I've been saying that I perceive happening into 2026. Now we're getting the Ys and the analysts kind of showing us that what's happening over here. And you can see the weakness in the rental market right now is alarming. Don't forget, whether or not you get 50-year mortgages or not, the whole idea is that there's a lot of supply on the market in most areas outside of the Northeast, and there's not as many buyers. And as more buyers are able to enter, maybe mortgage rates come down, maybe mortgage payments are reduced through the amount of time. whatever, when more buyers come on, they're going to be very picky about what they're buying, and sellers are going to have to continue that want to sell to reduce their price, and that is going to continue to bring that down. And then you can see over here, you could see that the biggest drop in rents in 15 years. It's all a show. Like I like to look at things like the insurance. I like to look at groceries. I do all the shopping for the family, and I'm keenly aware of what is happening over at the grocery store. I like to look at yeah, things like that. And then I guess you could say for sure, for those that are not locked into a mortgage under 3%, that well, massive inflation occurring in the housing market. If you're looking at what it costs to get a mortgage now, operating expense ratio. Again, guys, forgive me. Sound money wins in the end. That's right. So that's another thing. People are wondering, guys. Thanks for allowing us to do what we always do, and it's putting everything together, and it's kind of like is Bitcoin sniffing out some type of liquidity crisis? Is it the canary in the coal mine? By the way, Andre has a big audience, right? Ben has I think this is Ben's chart. I'm not positive, but I think it is. I think he mentioned Ben in this video. Ben has a really large audience. And what happens if retail sells right here? They like, let's say we get 2-week close below the SMA, and retail is like, you know what? Every other time that's happened, it's been a bear market, 75%, 85% drawdown, and then 12-month in duration. I'm out. I'm not doing that again. I'm going to buy Bitcoin lower. Is that going to drive, if retail is exiting, the price of Bitcoin down? In the past, it absolutely has. It was a retail-driven market. Actually, there was no institutions involved. Institutions couldn't even get involved. I've been telling you, for people keep looking at Google Trends. The searches for buy Bitcoin are so low. Why? Because retail's irrelevant. The searches for Bitcoin are so low. Why? Because all retail is stuck in alts. What's this cycle about? Guys, this is the early majority. The institutions are here. And at this particular point in time, if retail exits the market here, if we get a second close below the SMA, and look over here at the SMA. So this would be the first if it were to happen. Yeah, like last week we flirted with it, and then there was a nice bounce. This is another flirtatious dance with the SMA, and I think it would take two to get people to say, all right, I'm exiting, and I'm not going to buy Bitcoin lower. It's look, things like liquidity, things like some type of event where you were to see some big players go down. In the past, we've seen exchanges. It's usually been a capitulation event, and Bitcoin price has been significantly lower. I imagine that would be something that would happen with these treasury companies. I don't think at 80,000 Bitcoin that we just experienced in April, which required no liquidation events, that there would be. If retail exits here, it does not really have an effect on the market whatsoever. And if other people that see it like myself are correct, and 2026, I wanted to look on Polymarket. Like 1 year from today, do you think Bitcoin's price is higher or lower? And I think it's higher. And I think it's higher. A lot of people think it's lower and significantly lower. If it's higher, a whole bunch of people got left behind, and that's unfortunate if that's what happens. And it's especially unfortunate as that for many, Bitcoin is that lifeboat. You just saw in China they had a AI conference, and the one of the founders of DeepSeek was like, listen, this is like I know right now we're in a honeymoon phase where we're talking about productivity and the productivity that these tools offer to a lot of people. But the fact is that over the next 10 and 20 years, they're going to replace just about every job. And that is frightening. And if people right now are giving up their opportunity, it could be bad. It could be bad news bears. I guess that's why we're here together working. Um, right? How many people are in gold? Most of the people that I think that are in gold are either like, I don't like the word, but I'll just call it, what is it, the boomers, the boomer generation, right? The boomers, and they've been holding that stuff for quite a while. Some of them, I think one of the worst things I ever heard. Bear with me here. Not your keys, not your coins. Could not be any truer. For gold bugs, it was, listen, like, you cannot trade futures. You have to own the gold, because same thing, like, even if your gold's in a vault, which everyone stores it in a vault, right? It's like, you don't like, it's not your gold, really, at the end of the day. And you don't know if it's segregated and whatever, and have you. But point being, for these last 15, 20 years, it would have been much better speculating out in the futures market. Much better. And the amount of leverage. Anyway, um, gold people, boomers. A lot of boomers hold on to gold, and a lot of people that are also buying gold right now, aside from Tether's buying a lot of gold, is, of course, um, Bitcoiners. A lot of OG Bitcoiners really love gold, and they are just diversifying out. Are they the ones moving price? No. Are they taking a position to diversify? Yeah, you want to concentrate your money, your bet, and gain wealth. And then once you've gained wealth, you look to diversify it out. It's just smart. It makes sense. Um, Crashing down. People are giving up on gold. I think this is a monetary reset trade. I don't think this is a debasement trade. If gold breaks out of here and continues higher, I think that you're not looking at a debasement trade happening. No, that has not changed my view. Bitcoin is a hedge against the debasement of the underlining. Nothing has changed. It's dependent upon the adoption. Both those things looking forward have never been stronger. The Fed is about to move towards, and is working towards, moving towards outright QE. That's not what happens next. You all know what happens next. What happens next is what happened over here. And I'm just going to remind you, as we move towards over here, the last time there were two closes below the SMA were here and here. And that is almost at a very similar situation that we are today, in so much as that's the point that the Fed was winding down QT, just wound it down. That's the point where the Fed had just started a series of rate cuts. And yes, Bitcoin went ultimately much lower. Not This is the time that Bitcoin did those two things, which is the most similar to where we are right now. At this particular time, Jordan's always been like, no, it's the Fed cycle. And here we are in the Fed cycle, and the Fed is stopping QT, and they big on their rate cuts. This is exactly where we are. Now, does that mean that we're going to lead to a crash? If there's a liquidity crisis, then that's what happens. I don't think that the Fed is in any rush to go ahead and or needs to inflate the system. And by the way, there were many of us watching that, like, outside of the lockdowns, the Fed needed X amount of money to keep the system afloat. We didn't know, like, so it wound up being the lockdowns happened. Are the two correlated in any way? I have no idea, but it happened. And we're not in that situation right now. I don't think that the Fed is anywhere close. Now, there are some people, some really smart people, who, running some numbers, were talking about by the summer of 2026, the Fed will need, assuming everything just the status quo continues, that the Fed will need to return to outright QE. I put it's on my it's on it was a conversation I was having on Twitter with some people. Some people were watching the live streams. They then took it out to X, and that could happen. I don't know, but maybe, you know, today and looking forward next 3 to 6 months doesn't appear to be an issue that I'm remotely aware of outside of that one reference that I just told you. So we'll see. This is where we are today. When you hear things like Andre talking about what happened here with the SMA, he said it's never happened before. It has happened before. He said every time it's led to a bear market. Right here is the last time the Fed was in this particular situation. We have 1 and 2 closes below. That wound up leading to a nice 40%, 35% gain up on Bitcoin. Yeah, then there was a big crash down. That was a liquidity crisis. That was a global crisis. That was horrible what we all experienced. Dancing with the line right now. And like, is everyone panicking? Is anyone panicking? I don't feel panic yet. I want to talk about that a little with you though right now. By the way, let's talk about our positioning first. All right. And yesterday I'm telling you guys, hold on, let momentum return. By the way, this chart here is going to look terrible for Bitcoin about 60 days from now, in so much as that right now you're seeing Bitcoin in a 12-month rolling basis leading the way. And that's going to happen up until about January. And January, like January 1st till today, Bitcoin is up 7% or something like that. Not a good look right now. And maybe it goes negative. Anyway, this is going to start looking really, really, really poor and interesting at the same time. Our only open position right now on stocks is MicroStrategy. Strategy, currently still holding that short position, that beautiful hedge, and it's 17% into profit. We also at this particular time have Cardano open and on our swing trades, and that trade right now is just into profit. I mean, healthy into profit. I'm sorry, 1.6% into profit. And then Ethereum taking a new trade. Ethereum was just stopped out. And the question was, what happened with V4? Sorry about that. Stopped out on this big wake up over here, right? And V4 also was stopped out on that same trade, right? Just for those that are wondering, and V4 taking a full stop loss on that wick as well. Cardano trade entry is just about the same. And Bitcoin here is on the sidelines still. So yesterday I was talking about the importance of, at this particular point in time, like wait for momentum to return. The only trade we have open in stocks is a short trade on strategy. We are attacking the short side here on our swing trading templates, and that says that, well, momentum is rolling over to the downside. This is not a time to be looking at like momentum's going this way. Are you going shopping for alts? If there's pain, that could be an opportunity to do that. This is just momentum rolling over. Right now, you want to stay, by the way, 50 SMA, 101. Bitcoin bull run has been out of the market here since $114,000. Right now, what you want to do is just chill. Again, we were talking about yesterday. You are a surfer. You are on the sidelines. Many people in CTM are buy side only. That means they're not in the MicroStrategy short. A lot of people in CTM are buy side only. That means that they are on Bitcoin and crypto enjoying the grass. They are happy waiting this out, preserving capital, because they like, it's not a question of having expectations. It's just a question of trading what is happening. And that momentum has gone out, and either you're trading on the short side and you're looking for an attack, and that may or may not follow through. We never know on either side. But right now is not a time to be looking to take on risk. Like, wait for that momentum, which it will return. People aren't panicking yet. They could soon, though. I want to take a look at this with you. I want to jump back over. And I mean, NASDAQ is off 3.5% from the all time high. That doesn't seem to be a cause for concern. If you zoom out with me, this is again just looking at all deviations after 20% drawdown. This current one is tied with the highest ascent out of a 20% correction. It's tied with the 1998 deviation. 1998 and this current one both previously saw 2 prior years of 20% returns plus on the S&P 500. It's only happened 4 times in history. These two out of a 20% correction share that. And if you look at the red line over here in context, I mean, a lot of people are really fearful, but I wonder. I want to take a look at some of these stocks that, for those that are interested in liquidity, we talked about the CTAs in a flat tape, sellers in a down tape, significant sellers, specifically over the next week and month. And then we looked at buybacks, right? And you can see that we have, I'm looking for the amount. December through December 19th, we're going to be in this $6 billion a day. That's pretty significant. Retail remains undefeated. There's not CTAs over here on a down tape. Massive amount of selling. 15 billion in total out of the US. $49 billion in a down tape over the next month. $213 billion. Buybacks would not cover that. That would, if this were to happen and we were to see what turned out to be a significant breakdown, a down tape over here. And by the way, on the NASDAQ, this is our first technical breakdown closing below the green line. If that happens and we see that downside, that is going to provide fuel for the upside because those CTAs eventually need to turn around and cover their positions. Here's what I want to get into with you. So let's move over. And by the way, man, nasty. Dollar here. If the Fed cuts, I think that we break this line and then we move back down. I guess we don't know if the Fed's cutting or not until we get that first week of December and we get the jobs data that's needed. I wanted to just take a look over here. Here's Oracle. Y'all remember this day when Oracle sent out their earnings and they were like, oh yeah, we're just gonna like they gave these amazing estimates, right? And a lot of people are like, that's not gonna happen. Other people like, don't bet against Larry. I don't know. He's getting old. When Buffett got old, he didn't do so well. So anyway, closing the gap, is that an exhaustion gap? We were seeing Peter Brandt talk about the exhaustion gap on the NASDAQ, and I was like, this looks like this could very well be an exhaustion gap. Can you imagine taking out that low, right? And a lot of people, Barclays yesterday estimating by I forgot what month in 2026 that basically Oracle is bankrupt. They're going to need OpenAI to pull off a little bit of a miracle. And perhaps OpenAI is able to do it, especially if they're able to go public in time. If they're able to go public and get that extra financing, who knows? Did you see Circle? Circle's getting crushed. This has not been on my radar, on our radar, and it's coming pretty close back towards that IPO price. That's interesting. What are your all thoughts on that? And please let me know what you're thinking here on Circle. All I could say here that you could see that bear flag that formed. That's amazing. What about CoreWeave? The CoreWeave also, look at this. It's not much dissimilar to what's happening on Oracle. Is this the end of the AI bubble? By the way, and I don't have the answers to any of those things. I know that we have Nvidia's earnings next week. That's pretty substantial point over here. We're looking at Nasdaq 3.5% off all-time highs, and we're seeing some of the weaker links definitely feeling the crunch here. I think that's healthy. I don't see anything wrong with that. And just like David Sachs of the All In podcast said recently, well, last week, he's like, look, there's no government backstops coming. There's no government bailouts coming. Whether that's true or not, I don't know. But what he did say is that what's going to happen is that we have a race for frontier models from 5 major companies. And if one of them doesn't make it, the other ones there are going to be able to pick up. And that's the truth of it. That's that, um, Circle starting to look like a good buy. Genius Act, Genius Plan, stable. The market cap is enormous of Circle. It's got some outside resistance. This is not the cleanest. It's not the cleanest. You know what? It's not the cleanest, by the way. Hold on, maybe I could get cleaner. Bear with me 1 second. I just want to see something. I'm gonna try something. And I want to see if this peak here. Nope, that doesn't work. Let me try one more thing. I'm trying to make sense here of structure on this IPO. Huh. I wonder. So I'm saying to myself, let me tell you what I'm thinking in my head. I'm saying to myself, first of all, if this line is correct, which I'm just off the first 2 weeks here, I don't know. And I'm saying if it is, and then this one doesn't touch, and this one doesn't touch, I like when there's that perfect symmetry. If it were correct, I'd be waiting for this to break down. And on the breakdown, I would say that's the time to be looking for a good opportunity. But when I tried to look at it differently, and if this one is correct, I'm doing these 2 lines. And then before I do those 2 lines, I then checked up over here, and it's close. I don't know if it's not like magically correct. And if that's the case, if that is correct, and again, I'm very fuzzy here. I don't see anything correct. If that is correct, then we just broke down right now from what would be the parallel channel. And yes, indeed, this could be a beautiful opportunity setting up. But the whole thing is that, oh, maybe because I'm on the 3-day. Let's try this. I mean, it's so close. It's just not perfect. It's so close up here, but it's not perfect. And we did break down below. It might be a really good opportunity. What are your thoughts? What are your thoughts? I don't know. I just don't know. I mean, that could be like there's mild panic in the air, and it's hard to pull the trigger when there's panic. That's the truth of it. Circle's not Tether, but Circle for sure is going to see what is already a massive market cap, significantly over the years ahead grow. Might be a great opportunity. I don't know. Interested in your thoughts. I'm kind of, is this something that you want to own for the next 10 years? Would you rather own Circle or Tether for the next 10 years? We have different opinions between many sharp people here. So it's hard to get. We're gonna keep watching it. What about CoreWeave? CoreWeave, I wouldn't touch it. I mean, that's been a significant down. You could watch for a liquidity grab if it breaks above it. It's just not I don't know. It's not my cup of tea. Here's 21. Is this a time to be looking? at what's going on over here with 21. Conservative line. Could be. Could very quickly pounce up here. I'd be watching that. Let's watch that together and see what happens. Whatever happened to, looks very similar to 21 over here, is Metaplanet coming back into an area of interest. Interesting over here. I'm just going to go down over here. Hey, there's a lot setting up here. I think it's time potentially to get in line here. Circle Coinbase. This is our structure that we've had. We've tested into it. We're holding. Maybe one of the best opportunities coming up out of what we've looked at so far. The rest seem pretty like, I don't know. Palantir continues to hold on over here. And we looked at Oracle already. Oracle looks pretty bad. I would not be looking to go long on Oracle out of all those things. And I think CoreWeave is kind of similar over there. We'll watch them. Let's take a look at what's going on with these leveraged ETFs right now. A lot of people have been interested in Irene. And I mean, does it look bad? Does it look good to you? Is that Wyckoff distribution that you just all saw over here? It looks like it to me. Um, did it pierce just now? I wouldn't touch it on the long side. And that looks like a potential opportunity as well on the downside right here, right? To me, that looks like a potential Wyckoff distribution. These nuts, Destiny Tech, waiting here for that first break above. That's a big play on OpenAI, big play on SpaceX. What about the builders? Ooh. If someone sees something that looks attractive as we go over these charts, please let me know. Attractive could be on the buy side and or the sell side over there. We'll get to Labu in 1 second. So what? I'm watching this one here. Oof. Biotech. Guys, I mean, with the advancement of these LLMs, I imagine personally there's going to be some extraordinary breakthroughs in the biotech sectors. I really, really believe that. Let's just zoom out over here. Man, that this was the April low. I don't have a read on it. I'm looking for, I guess, I don't have a read that's worthy. The relative strength here is crazy. I would have to wait for some type of, I'm not, yeah, I just, the relative strength here is something to speak of. I think that this sector is going to be explosive ahead. I don't know that this is looking like an opportunity or something that I would want to chase. Miners going over here and jumping off of Bitcoins. One day we'll get there. Right now, this is gold story. Chinese tech. Yeah. What about TMF? Forget it. What about again, the relative strength here is really impressive. For me, the three that I see at the bottom. This is something that looks like, you know what? We've seen that setup before. We love those descending wedges that are sharp like that. If they break out to the upside, there could often be large and quick spikes, something that I see watching here. This one is interesting to me. And you know, definitely will watch and wait for the breakout. And this one looks like weakness to me. Let me go to the daily chart over here. And it's breaking down today, right? So that looks like a weakness. And then, you know, assuming we close below and get the trigger, we'll watch for a repair. Right now, a repair would be closing back above the yellow line. it is going to speed up everything. Absolutely incredible. Yeah, and if you're good at for me it would be an index. If you're good at being able to pick particular companies, man, there's going to be some incredible breakthroughs. Um, yeah. Oof. I thought I had the bottom over here. Most certainly did not. Bitcoin over here, we're waiting for a resumption up. Bitcoin bull runs showing momentum is not there. We're on the short side, folks, on Bitcoin and crypto. Listen, nothing has changed from my own discretionary view on the macro. Seems to be a few people in my camp. Amongst them are those of like Lynn Alden, Darius Dale, then the people in the opposing camps, Andre Jakin, uh, my friend Ben. I think that someone was saying this is the first time I've ever seen you and Ben having opposing views, and we'll find out. Oh, well, there's a massive dumbing down of society that's been already in motion for quite a while. But when you talk about society as overall, and then you have certain segments that are smarter than ever. And you could see that on a local level. You could just look at a normal grade in elementary school, college, high school, and it's not much different than the indexes right now. You have a very select few making up the majority of the gains. You have the same thing that's taking place in the economy when looking at income levels. And the top 10% is booming and thriving. Top 20% is doing very well. Bottom 40%, it's a silent depression. It's not a recession. And the middle class is dwindling out. These AI advancements are going to. I'm not in that kumbaya utopia thing where like everyone will have everything and it'll all be free and you could do whatever. No, it's going to consolidate the haves into an even tighter and impossible segment to reach. Guys, who is going to replace these jobs? Yes, people say, well, they thought during the Industrial Revolution it was going to be the same thing, and all these jobs are going to be taken away, and it just created more jobs. That's what's going to happen with AI. Ah. Yeah, Greg. I mean, let's see what happens when the government reopens, and then there's always something else ahead of us, right? That's why they say the wall of worry. And the next thing is going to be what's going to happen with the Supreme Court, and what happens if the tariffs get struck down, right? What happens if the tariffs get struck down? Outside of China, the U.S. has made a bunch of deals, right? Do those deals stay in place? I don't know. Um, but that's something that for sure we need to watch out for. First, we need to see, and it looks like today, right? They're voting to reopen the government potentially, the House, get the government open. That should bring on what has been a liquidity headwind, and TGA start drawing down. We'll see how it happens here. If for some reason that this favorable time of year with flows does not wind up being so. I want to look at this chart with you, right? So I'm trying to see from this point on, this far past the drawdown, right? And then I'm lining up these tracks, and you could see here the blue one and the magenta one or the pinkish one. Those two, which were significantly, instead of being up 12%, were kind of flat right here, but they just went flat through the end of the year. And then we have a couple of lighter ones over there as well that aren't really being seen. Yeah. All right, y'all. You guys were light on the love today. Anyone who watching on the replay crew, on your way out today, go ahead and smash that like button. Show some love. Share your thoughts below. We'll hit on it tomorrow. Um, everyone, wait for the momentum to return. Wait, pick your spot when the waves come in. We're going to ride Ed Sakota. You all know that I've talked so often about Ed Sakota, and his P&L is so important. One of the greatest runs in financial markets. And people look at, I forget what it was, something like $5,000 into, I don't know, something ridiculous. But most of the time, that P&L is running sideways and running sideways for an extended period of time. Ed, someone asked him, like, I want to understand the markets better. Help me understand the markets. And Ed was like, listen, go to the beach. Go to the beach. Watch the waves. Learn the power of the waves. Do not stand in the way of the waves. Go with the waves. I don't think it's possible, but I don't know why I don't think it's possible. It's come up before. Those gaps are pretty heavy. Those gaps are pretty heavy. Those gaps are pretty heavy. All right, y'all. God bless you. I'll see you all tomorrow and back on the inside.